This is the Asia Trade. I'm Shery in Seoul.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Asian stocks are set for a weaker open with concerns mounting over the US-China trade truce as President Trump says he's doubling steel and aluminium tariffs. Oil jumping despite a fresh OPEC Plus supply hike. Ukrainian drones strike military targets deep inside Russia, while Moscow launches fresh attacks on Kyiv, escalating the conflict ahead of crucial peace talks. And the US Defense Secretary tells the Shangri-La dialogue that Washington remains committed to an Indo-Pacific presence and to countering China.
And take a look at the setup across Asia. This is a very important week here in South Korea, in Seoul, to cover the presidential elections on Tuesday, tomorrow. We are expecting to see an end to 6 months of political turmoil. We saw the Kospi gaining ground. Ahead of this, of course, we had the martial law declaration in December and the ouster of the former president. Take a look at the setup because we're watching currencies across the board in Asia. We just saw the dollar notching its longest monthly losing streak in about 5 years. The Japanese yen has been gaining ground for a third consecutive session already. We heard from the top trade negotiator there that we could see perhaps a deal with the U.S. as early as this month. We're also watching the offshore yuan at the moment unchanged. That market closed on holidays today, but we are really watching what's happening with President Trump accusing China of violating some of those terms of an agreement to ease tensions when it comes to tariffs. Heidi.
Yeah, Shery, just underscoring the fragility of this trade détente, if you will. So there's not a whole lot of conviction when it comes to how long this could progress, particularly when the pause with these relative various countries, I should say, starts to run out come July. But take a look at the picture when it comes to US futures. We're seeing a little bit of downside, about 0.3%. So US futures across the board really slipping there. That caution after Donald Trump announced those plans to double tariffs on steel and aluminium imports. Some of the negativity, as Shery mentioned, when it comes to that China relationship at play there as well. We're also watching treasuries, given just the volatility that we've seen in that part of the market, particularly across the longer end. But at the moment, we're seeing treasury futures opening a little bit higher just to compound the recent rally, which kind of broadly supports that risk aversion that has been putting downside pressure on US equities as well. Oil is the other big story that we're watching. We're seeing Brent crude jumping by 1.7%. Really, there's vying between geopolitical risk versus what we saw from OPEC Plus is playing out in quite an interesting dynamic after OPEC Plus agreed to add 411,000 barrels a day of supply in July, despite, of course, these heightened geopolitical risks in Ukraine and also Iran. That quota boost was sort of in line with expectations, but clearly there's a lot more focus here when it comes to the geopolitical and security side of the story. And for more on that, we mentioned earlier Ukraine staging a series of strikes reaching deep into Russia, Moscow launching a heavy attack of its own on Kyiv. This latest escalation coming ahead of a second round of peace talks scheduled for Monday in Istanbul. For more, let's bring in Bloomberg's Michael Head. So even with these peace talks scheduled, it's sort of really intensified business as usual when it comes to fighting on the front.
Yeah, I mean, but these were some extraordinarily audacious attacks by Ukraine. I mean,
right.
According to our reporting, they've moved these drones around in wooden houses inside Russia, and they've had drone operators there. I mean, they went into Siberia to attack airfields, Tu-95 bombers, which transport nuclear weapons. It's part of Russia's nuclear fleet sort of thing. Not there were nuclear weapons on them, obviously, but that's sort of their strike capability. And President Zelensky, Ukraine's president, said that this had been more than 18 months in the making. So amazing attacks, and Russia has obviously responded with fury with the attacks that you mentioned there. So, I mean, I'm not sure if it makes a lot of difference at this stage for the peace talks, but it just gives no sense of any let-up on the front lines. And Ukraine really, it just seems to be trying to find that pain threshold for Russia, but it's very difficult to find. I mean, sort of on one hand, these attacks show that, it's sort of the corruption of the Russian state that you can get your security officials through to stage this kind of attack. But at the same time, Russia just has such, the administration there has such great control in terms of media, in terms of the message that comes out. It acknowledged that these attacks happened. It said that, the damage was limited, etc. And it's obviously responded really heavily with Ukraine.
Mike, the first time that they met in Turkey back in May, we actually saw them with an agreement to exchange prisoners, also to try to get to a ceasefire. What are we expecting from this second round?
Yeah, well, look, I mean, Ukraine sort of put a lot on the agenda, that its defence minister will be there and, talks about a truce and all these sorts of things. But even if we go back to that first round of talks, they were releasing prisoners to one another as Russia was launching really significant strikes on Kyiv as well. So I guess, you know, we've sort of just got this two-track thing of sort of trying to find a way to end the war, but neither side is going to give any ground, you know, or show any weakness, at least on the battlefield. And Russia certainly is trying to project its overwhelming strength there. So Ukraine has put a lot on the agenda. Really, what it comes down to is what Russia, you know, how interested Russia is in any of this. And for that, we're just going to have to sort of wait and see. I mean, there were a lot of hopes, or you know, fairly high hopes as well with that first round, because President Trump had sort of sought to put a lot of pressure on both sides. Now, you know, we've got them striking each other hard, but we do have some talks between officials that will go ahead, and we really just have to see. I mean, ideally, I think what Ukraine would want, and certainly what Washington would want, is some sort of truce, some sort of ceasefire that allows them to then get to a stage where they try and work out how to end this war.
Bloomberg's Michael Heath there joining us with the latest on the ongoing Ukraine war. And here in Asia, U.S. Defense Secretary Pete Hegseth has reassured allies that Washington remains committed to countering China in the region. He delivered that message at the annual Shangri-La Dialogue in Singapore.
We do not seek conflict with Communist China.
Yeah, thank you.
We will not instigate
Round and round.
nor seek to subjugate or humiliate. President Trump and the American people have an immense respect for the Chinese people and their civilization. But we will not be pushed out of this critical region. And we will not let our allies and partners be subordinated and intimidated.
Bloomberg's Avril Hong there joining us from Singapore with the latest. And Avril, of course, we heard from Secretary Hegseth, and he also wants Asian allies to spend more when it comes to defense.
Yeah, I think that was one of the key messages that came from the U.S. defense chief, right? I mean, for context, going into this forum, there had been some concerns following J.D. Vance in March, kind of telling the European allies, you know, to up their defense spending, to talk about the war in Ukraine, what we could potentially expect from the U.S. Defense Secretary. Also some lingering concerns from Asian partners about whether there will be some element of grandstanding from this former TV personality on what was only his second visit to Asia since March. But ultimately, I think some of those concerns were not quite warranted. Hegseth actually managed to win some praise and, showed that there was a grasp of some of the nuances when it comes to the messaging on Asia, that when it came to upping defense spending and trying to relay what Trump's demands are on that he couched it more as a way to potentially prepare for any event of a Chinese invasion of Taiwan. And I think also what helped Hegseth's case was that the Chinese defense minister, for the first time since 2019, we haven't seen a Chinese defense minister at the Shangri-La Dialogue. So that really helped him to set the pace, set the tone as well. But of course, all this is not to say that there's not some lingering concerns still, and that this was all able to help offset the concerns from some of these Asian leaders of the erratic policymaking coming out of the U.S., particularly from Trump.
This is a very different Chinese delegation compared to last year. Did we see much activity or response from the officials that were in attendance?
Yeah, so the Chinese defense minister not being there also didn't mean that the Chinese side didn't respond to some of the comments from these Western leaders. I mean, we heard how the Chinese side pretty much rejected the European leader, French President Emmanuel Macron's suggestion that a global response, or the global response that we've seen to Russia's invasion of Ukraine, could somehow inform what the world and how it would react in a possible invasion of Taiwan by China. And China pretty much rejected this stance, rejected these comments, these suggestions from Emmanuel Macron, rejecting as well what Hegseth said when it came to, comments on Taiwan. And him criticizing the Chinese defense minister not being there. Now, there are a couple of theories out there as to why the Chinese defense minister was not present at this year's event. I won't go into that, but I think the main takeaway here is that it was a missed opportunity for China, not just in being able to engage in this really high-level dialogues when it comes to military cooperation and communication, but also coming at the time pretty much ceding the room to Hegseth. And while the Chinese are trying to position themselves as more reliable partners than the US to some of these Southeast Asian countries. And I think it was the Singapore Defense Minister, Chan Chun-sing, who kind of encapsulated this sentiment in saying that if China thinks that the world doesn't understand it, then it needs to seize every opportunity to make its voice heard. So all in, it was seen as a sort of missed opportunity from the Chinese side.
Bloomberg's April Hong there in Singapore. Well, India's military has confirmed that it lost an unspecified number of fighter jets in last month's clashes with Pakistan. The Chief of Defence Staff, General Anil Chauhan, also told us that the conflict never came close to nuclear war.
What is important is that not the jet being down, but why they were being down.
But a jet?
Why? Why?
Yeah.
Why they were. So the good part is that we are able to understand the tactical mistake which we made, remedy it, rectify it, and then implement it again after 2 days, and flew all our jets, again targeting at long range, which I said.
Pakistan claims 6 Indian jets were downed. Is it correct in that estimate?
Absolutely incorrect, and that is not information which I said is important. What is important is why they were down. That is more important for us. And what did we do after that? That's more important.
I guess the world is asking for clarity because these are words that came from Pakistan, whether it was 6 or whether it was fewer. So just to get clarity, Indian jets were downed, but the number 6
As I said,
is not
numbers
inaccurate.
are not important. Why they were down, what mistakes were made, that are important.
What's the state of relations between Pakistan and India at this point in time?
We are back to a normalization of relationship in the sense that we have an agreement. We can't call it ceasefire. Cessation of hostilities is there. And we are seeing that on the borders, whatever forces had come into place, they go back. So it's hopefully it will remain like this. The state of a relationship depends exactly on how Pakistan will behave in future. What India has done is we have laid clear red lines, the limit of our tolerance against terror. So the state of relationship is purely dependent upon how Pakistan is behave in future.
The world was watching developments really closely because both Pakistan and India are nuclear powers. What was the risk of a nuclear war erupting?
I think none whatsoever, because I personally feel that there's a lot of space between conduct of conventional operations and the nuclear threshold. And we have demonstrated it not once, now thrice. So it was during Uri, then it was your Pulwama, post-Pulwama, Balakot strikes, and now. And what I personally feel, one of the experiences from this particular conflict is not only in this escalation ladder, which we continued with Pakistan, in each of these ladders there are much more sub-ladders which can be exploited for settling out our issues without actually raising that nuclear bogey. That's too far-fetched.
That question was asked because the US, in fact, President Trump said that the US managed to stop a possible nuclear war.
I can't comment upon that, but there was nothing like that between us and Pakistan. And our channels of communication with them were always open. And that's one way to control escalation. That I think was never on the cards.
India's Chief of Defence Staff with Bloomberg's Hasinda Amin on the sidelines of the Shangri-La dialogue in Singapore. And coming up on the Asia trade, Moody's Analytics tells us where they expect to see tariff-induced volatility in the financial markets. TriVista Capital joins us to discuss the fund's Japan investment strategy. Plus, we look ahead to tomorrow's South Korean election with the Center for a New American Security. Much more ahead. This is Bloomberg. In Asia this week, we do have a series of economic data, not to mention the presidential election, as well as, of course, a central bank rate decision. Here in South Korea, Koreans headed to the polls Tuesday to elect a new president in what appears to be turning into a tight race, while China's business surveys for May expected to show a rebound in manufacturing held by the tariff truce with the U.S. Key economic releases, including inflation prints from Indonesia, Taiwan, Thailand, the Philippines, plus Australia's GDP. On Friday, the Reserve Bank of India expected to extend its easing cycle with a third rate cut, Heidi.
A lot going on. That's, of course, not even sort of contending with the broader geopolitical and trade cross currents, right? Let's bring our next guest. Katrina is the Director of Economic Research at Moody's Analytics. Katrina, always great to have you with us. And I mean, let's start off with that, right? Because it feels like the temporary truce between China with some of these other negotiation countries is really pretty fragile at this point.
Oh, incredibly fragile. And we can see that the incoming pressure point is when the reciprocal tariff rates on that 90-day pause ends early July. And then the next pressure point is really coming quickly as well between that US-China trade truce, which is mid-August. And we know that there's so much to be discussed and so much that needs to progress that needs to be made before we can make meaningful progress in terms of getting to a sustained truce. And, US and China are just so far apart on so many issues. So it's a Goldilocks scenario to assume that we're going to have a US-China stable relationship over the next couple of months.
You don't envy central banks, particularly. I was looking at the dates. The next RBA decision is, a day before that détente runs out, right? How much do you think, confidence-wise, investment willingness-wise, both from businesses and also households, that the downside is already embedded? Or do you think that can, change pretty quickly if there is more longer-lasting trade deals being announced?
Yeah, I think we're seeing central banks tread incredibly carefully. And I mean, the RBA is known as a conservative central bank, and they have really become more dovish as a result of this incredibly volatile and weaker global growth projection over the course of this year to try and manage some of those downside risks. And it's going to be incredibly difficult to be able to provide some sort of insulation from a central bank point of view, because at the end of the day, the RBA, for instance, and others can deliver a rate cut, but it does take time for that to actually manifest in the real economy. And as you mentioned, because households and business sentiment is so fragile as well, it does mean that the potency of that easing is dialed back as well.
Well, any improvement in the Chinese economy should help Australia. What did you think of the latest PMI numbers that we got over the weekend from China?
I mean, it's hard to be positive when you are looking at China's economy, but it was a nice development to see that the manufacturing PMI did improve to 49.5 in May from that 49 reading in April. But I think, what isn't getting as much attention is the fact that the non-manufacturing PMI that actually deteriorated in May, it came in at its weakest reading since January. And when we're looking at how can China's economy manage through this incredibly volatile export environment? We need to look at domestic demand and see how that's traveling. And the non-manufacturing PMI is a decent barometer of the services sector, and it's still clearly struggling, particularly given the amount of stimulus that's being unleashed towards the sector to try and shore it up. The fact that it's still struggling does tell us that China's economy is just acutely vulnerable to the whims of the US protectionist stance.
And of course, South Korea very much vulnerable to what happens in the global tariff landscape. But Katrina, what do you think about the upcoming presidential elections and how that could provide some more clarity for the direction of the economy here, which has been pretty fragile?
Yeah, I mean, the domestic political situation has been incredibly fragile in Korea, and I think voters are really hoping that this election does provide some sustained stability. And we're seeing that the key voter issues heading into this election are, of course, what's happening overseas, but even more importantly is what can the incumbent do to try and shore up households. Households are really the point of vulnerability throughout this period. We're seeing that households' purchasing power has been eroded, youth unemployment is incredibly high, and so the economy is really crying out for some sustained relief on the domestic front. And South Korea as well is in an unfortunate position, because if we're looking at other economies in Asia, what we've seen is that the domestic demand side of these economies is often quite upbeat and quite resilient, whereas in Korea we've had a weakness, a double whammy if you like, because we've got that weakness in domestic demand at the same time as exports, manufacturing are particularly struggling.
What do you see in China? Of course, we've got the manufacturing PMIs this week. Home sales continue to be sluggish. That's perhaps unsurprising. How well do you think the economy is withstanding the ongoing trade uncertainties, even if there is a pause at the moment?
Yeah, I mean, honestly, not well. I mean, and it's difficult to get a decent reading on that. I mean, our expectation is that China's GDP growth this year will only hit 4%. So that's, 1 percentage point weaker than what the government's targeting at 5%. On the surface, that doesn't seem like much of a miss, but in, Chinese national accounts terms, that's a huge miss, because there's just no pockets of sustained strength that can pick up the weakness in exports and manufacturing. And we know last year it was really the export picture that drove the economy, while domestic demand lagged behind, whereas this year they're not going to have that saving grace.
Katrina, always great to have you with us, Director of Economic Research at Moody's Analytics. More ahead here on the Asia Trade. This is Bloomberg. You're watching the Asia Trade. Take a look at some of the big stories we're following from around the world. Dozens of people have been killed near two aid distribution stations in the Gaza Strip. Medics and witnesses say Israeli forces fired on Palestinians gathering in southern Rafah and the Netzarim corridor. Israel's military denying those claims based on what it calls its, quote, initial inquiry. Meanwhile, US proposal for a ceasefire that would increase aid to Gaza is in limbo after Washington rejected a Hamas counteroffer. Iran has rejected a UN nuclear watchdog report accusing it of nuclear violations, claiming the agency is motivated by politics. The report says Iran has expanded its stockpile of new weapons-grade uranium and failed to report nuclear material and activities at 3 locations. Iran says the findings are based on, quote, fabricated data, and it's repeated that it's not seeking atomic weapons. OPEC Plus has agreed to increase oil output for the 3rd month in a row, despite reservations from key member Russia. Oil-producing nations say they're adding 411,000 barrels a day to the market in July, matching increases scheduled for May and June. The supply hike is seen as a move by Saudi Arabia to punish overproducing members, recoup market share and satisfy President Trump's desire for cheaper oil, Shery.
And Heidi, we actually had that pressure on the oil prices for the last 2 sessions, although today in the Asian session we are seeing crude trading now towards that $62 a barrel level. Gold futures also marginally higher, 0.6%, climbing in the early session. Perhaps a little bit of that early risk-off move this morning. We had seen U.S. equity futures also losing ground, and not to mention that, of course, we're coming off the longest monthly losing streak in the dollar in about 5 years. But as I mentioned, U.S. equity futures, take a look at that. The S&P 500 mini futures down 0.3%. This is, of course, after we saw it unchanged in the previous session and taking a hit of about 1% on the S&P 500 after President Trump accused China violating an agreement with the U.S. to ease tariffs. Nasdaq 100 futures also down. This is Bloomberg.
The message we're sending is that if we want the partners in the Indo-Pacific to be interested in our security problems, we better be interested into theirs.
Focusing on the aggressive actions that China has been obviously demonstrating in this area, and this is what we are here to do, is to ensure that from the various partnership and military collaboration that we have in the Indo-Pacific region, that we send a strong message that the law of the sea is there to be respected, and then the area needs to be free of access to all of the partners in the region.
We are increasing our defence capability in a historic way, but so many other countries are moving down that path as well. It's also why we are very much building our relationships within the region, but it's also why, in terms of the United States, we are keen to see a US which is focused on our region, and we're very keen to work with them.
Senior defence officials from Sweden, Canada and Australia speaking to us at the Shangri-La Dialogue in Singapore over the weekend. Well, Germany's Chief of Defence says Russia's invasion of Ukraine is the key driver of its military spending plans rather than pressure from President Trump. General Carsten Brewer also spoke to us at the Shangri-La Dialogue about his country's defence priorities.
It's, of course, air defense, where we have to speed up. It's main battle tanks. It's infantry fighting vehicles. It's artillery ammunition. It's deep precision strike. But it's also homeland defense. Taking all this together, we have set up our priorities. And for us, it's very clear what we have to procure in the next couple of months and years.
Might we see a revival of the military industry in Germany on the back of that? Has the US forced the situation on Germany, which has even considered converting a Volkswagen factory into a weapons production line?
Well, I would argue it's not the US forcing us. Of course, we have heard the wake-up call from there. It's much more Russia forcing us to spend more into defense, to do more, to take over responsibilities for our country, but also within NATO. I think the threat, and it's not only a perception, it's a real threat we are facing, and this threat leads to ramping up the production, getting or procuring more for the forces, getting forces ready to defend Germany, to defend within NATO, and therefore deter.
Might it be mandatory? Might mandatory military service be this is an option that you may have to consider?
This is basically the backfall position. So if we are looking into this 460,000, I'm very confident that we can reach, with reservists and active troops, that we can reach this 460,000. If not, then there has to be a political decision if mandatory conscription is necessary.
German Chief of Defense General Carsten Brewer speaking to Bloomberg's Hasinda Amin. Here in South Korea, presidential candidates will make their final pitches today ahead of elections triggered by the nation's worst constitutional crisis in decades. Let's bring in Bloomberg's Korea economy and government reporter Soo-hyang Chen. Soo-hyang, of course, we had a pretty sort of consistent lead by the front-runner Lee Jae-myung so far. What's the poll looking like now?
Yeah, the latest polls actually hint at quite a tight race compared to what we have been thinking. This is quite a turnaround for the People Power Party candidate, Lee Kim-moon-soo, given, as you said, how this was expected to be an easy win for Lee, if not a landslide victory. So final surveys that we've seen last week suggest that Lee is ahead with 46% support rate compared to Kim Moon-soo getting around 37%. So, of course, this is a 9 percentage points difference, but if you remember, Kim Moon-soo has been getting just single-digit support just weeks ago. So what we can say at the least is that there is a shifting momentum happening right now. How powerful that be, we will obviously have to see the vote results.
So election day will be so important, and vote counting. How will this unfold?
So South Korean voters will cast their ballot on the at polling stations across the nation tomorrow. We will likely see the results late Tuesday night or early Wednesday if the vote is very tight. One difference is that, unlike other elections, there will be no transition period. So whether it be Lee, Kim, or Lee Jun-seok from the Reform Party, we will see South Korea's new president sworn in by Wednesday morning.
What is sort of sentiment like at the moment? What are the broader concerns that we're hearing from voters?
South Korean voters basically want to really move on and see this political drama. And if you think about it, this whole political mess unfolded at a time when President Trump sworn in and started hitting U.S. trading partners with tariffs. And South Korea was obviously not an exception. And its officials are trying to negotiate for a lower tariff that is like 25% imposed across the board. South Korean president being impeached, it's not the first time, but the level of instability that we've been seeing in the past 6 months is just at a new level. We've seen 4 different leaders take charge of this country, from Yoon to prime minister to finance minister, then to education minister. So yes, tomorrow's vote will be very crucial for South Korea to move on and get back on track.
Yeah, so how they deal with the U.S., how they deal with foreign policy as well will be key, right? What are we expecting to change after the elections, given that if the front runner went to win the election, that would go from the conservatives having power to the progressives, right?
Well, if Lee Jae-myung wins the presidency, we're expecting South Korea to turn more friendly with nations like China and Russia. If Kim Moon-soo wins the race, we will likely see him follow on inherit a lot of policy that Yoon has been pursuing. One key difference that we are expecting from Kim and Yoon is that Kim is an advocate of nuclear armament of South Korea. That is, if South Korea can get support from the U.S. Another thing that we're keeping an eye on is relations with Japan. If you remember, Yoon's one of key agenda was to push for improved ties with Japan. Lee Jae-myung has been pretty critical about that. Of course, he has been trying to tone down that harsh rhetoric while on the campaign trail, but we will have to see if he follows through on those election pledges if he wins the race.
Soo-hyang, good to have you with us, Bloomberg's Korea economy and government reporter, as we look ahead, of course, to the presidential elections as Koreans head to the polls on Tuesday. Still ahead, Japan's top trade negotiator says his team is on track to reach a deal with the U.S. as early as this month. The latest on those talks next. This is Bloomberg.
Japan's top trade negotiator, Roshi Akazawa, says the latest round of tariff negotiations with the U.S. are on track toward a deal as soon as this month. Bloomberg economics and government reporter Yoshiaki Nohara joins us now from Tokyo for more. And we know that they sort of want to at least get the fundamentals of this in place by the time we get to the G7. Have we heard about any more progress?
Well, I have not, but the good news is that Akazawa at least clearly said there was a progress toward a deal. But he also made it sure that he didn't want to tie his hands towards a June summit, so that there are progress being made, but there's no final timeline or deadline set for this yet at this stage.
Any idea of how the U.S. Steel, Nippon-US Steel agreement could actually have an effect on the trade negotiations?
Well, from the Japan standpoint, they want to see this as a good momentum building up because they've been trying to say that the Japan invests a lot of money into the U.S. Therefore, it's contributing to the economy. But when you think about it, what happened right after the Akazawa spoke was that President Trump praised the investment by Nippon Steel, but he also decided to double the tariffs on steel. So at this point, it's not working in the kind of narrative that Japan wants to apply towards a deal at this point.
So how close, realistically, are the two sides? What are we watching out for next?
Well, what experts I've been speaking to all say that this is going to be a very complicated deal if they're going to be able to reach. So the guess is that they can maybe able to reach some kind of broader framework agreement in mid-June when the two leaders meet. But there's going to be a lot of details that has to be decided afterwards.
Bloomberg's economics and government reporter Yoshiaki Nohara there with the latest on Japan-U.S. trade negotiations. Our next guest runs TriVista Capital, a fund covering long-only Japanese-listed equities. He was also a speaker at the Seoul Investment Leaders Conference in Hong Kong last week, where he actually made a long call on Santen Pharmaceutical. Joining us now from Tokyo is Masaki Gotoh, CEO and CIO at TriVista Capital. Masaki, great to have you with us. I mean, we're just talking about the positive developments when it comes to the Japan-U.S. trade negotiations. Give us your overview of where the Japanese equity markets could go now if we see more progress on geopolitical tensions.
Yes, thank you for having me. I think the biggest concern, of course, is all this uncertainty. So any kind of certainty that we see whichever direction it might be, should be positive. Having said that, of course, this is a tax, so Japanese corporations will have to adjust to that. So I think we'll have to find the reality. Right now, companies, for example, we just came through earnings season, and there's a lot of confusion. Many companies deciding to include the tariffs in their numbers, some that haven't, and for now, some haven't even provided guidance. So it's very unclear. This uncertainty is really causing a lot of volatility. But once we have some clarity, at least companies can make decisions.
And yet you are making some pretty clear calls when it comes to, I mentioned earlier, Santen Pharma, for example. Do you have a price for that call? And where do you see this stock going in the likes of 2 or 3 years?
We don't have a specific price, but this company that just recently released a new myopia drug, we believe can grow their EPS. Their current midterm target has them growing their EPS double digits for the next 5 years. And even with valuations flat, we should be able to see that. We believe that the valuations are severely depressed, however, and therefore there's significant more upside from there.
It's interesting that you say you just need sort of certainty in either direction, right? How different, obviously, will the stocks picks be, and what are you sort of paying attention to sector-wise in the case of, I guess, at least 2 scenarios in how this narrative plays out?
Sure. So given this uncertainty, we do focus, we've historically focused on companies that have idiosyncratic factors that will drive the stock price in the next 2-3 years going forward. And we'll be monitoring the headwinds or tailwinds from that. And right now, of course, there are more questions, though, so there are many tailwinds, or headwinds, I should say. So we've generally focused our portfolio currently on a more domestic tilted portfolio. However, there is one theme that we do follow very closely from the last couple of years, and that is the escape of deflation from Japan for the last 30 years. So just as a quick reminder, we've had cost inflation rising from COVID, but since then we have had price inflation at levels. Currently, I believe that the Japan's CPI is the highest among the G7 countries. Followed with that with the rising wages, which we haven't seen. The wage negotiations are at the highest in the last 35 years. That will naturally lead toward interest rate hikes, slowly, of course, but that will continue. And therefore, I do not believe that so far Japan has been a story of buy Japan because of the governance reform, which I am a strong proponent of as well. However, I do think going forward, given the changes in the Japanese economy, it's going to an environment that we haven't seen in nearly 30 years, there's going to be a lot of changes. There's going to be only companies that can actually continue to raise wages and maintain high profitability and maintain their high return on invested capital, while other companies can start to go bankrupt or consolidate, I think is the theme. So we do focus on companies, high quality businesses that have the capability to raise wages, raise prices and raise wages, and become the consolidators of their industry.
Yeah, it's interesting. You talk about, obviously unprecedented times domestically. It's a multi-year strategy, and we see a lot of sort of external ups and downs playing into that, right? Can you talk us through some of the, I believe, around 15 or so names, and do you believe them to sort of be evergreen regardless of how the external environment changes, or do you think there'll be a fair bit of active rebalancing through that process?
There will be rebalancing because we do like companies that are priced, let's say, not too expensively. So if the stock works ahead of its value fundamentals, we would be trimming, of course. But generally speaking, it will be a fairly stable portfolio. Santen, of course, being one company that is probably more isolated to the global macro events than normal. Our top holding, for example, is actually a firm called Otsuka Shokai, which is an IT services company, and they provide services to SMEs. And IT services has been a growth industry well before the changes in the inflation. But as inflation improves and companies need to make their office much more efficient, we believe companies like Otsuka Shokai, who have the capability and the capacity to supply all the Japan that needs this type of improvement in worker productivity, is going to be a strong long-term beneficiary despite any short-term bumps that we might meet along the way.
Is that sort of the link that you're seeing from your comments earlier when you say Japan is escaping from disinflation, not to mention that we're finally seeing some positive real wage growth, that you actually need labor productivity because there's a reason the wages are rising. There's just not enough Japanese people to actually work out there.
Exactly. I mean, labor has now become a scarce resource, and it's the power that the current employees have is humongous. So we believe that before, Japan has been worried about wage decline or just maintaining wages, but now the worker has the upper hand. So the companies will have to pay up for this. Add to that, much more stringent labor laws here, as well as a change in the work-life environment that people have changed due to the pandemic. And therefore, we believe that the companies that can continue to raise wages and provide a better lifestyle will be able to win and be able to secure that very scarce resource that we'll be seeing going forward. So when people talk about the decline in population, I don't see that as a bad thing. And just as some statistics, the GDP per capita in Japan is one of the lowest in the developed world. We have plenty of room to increase productivity. And therefore, the working population decline is actually going to be a boon for several companies that can win and have already been growing before the pandemic, but now have the capacity to accelerate that growth going forward. And Aotsuka Shokai is one such example. But we look at other examples too, and there will be other side effects. For example, there will be more rising bankruptcies. And therefore, we believe, for example, we have a large position in a company called eGuarantee, which provides insurance for receivables. And we believe because of rising bankruptcy, that will be an increasing demand. So that will be another angle. Automation is another one. AI, of course, is another one. So anything that can help labor productivity while taking advantage of the industry consolidation, I think will be the long-term winners.
So you're really not seeing bankruptcies as something that could be macroeconomically destabilizing for the broader markets. You're seeing it more as consolidation that could help your calls, and how do other factors, like for example, the fluctuations of the Japanese yen, factor into some of your themes?
Sure. So yes, I mean, I do not see bankruptcies as we have too many companies. Look, just as an example, automakers, we have Toyota, Honda, Nissan, Mazda, Suzuki, Subaru, Mitsubishi, Daihatsu. US has the big three plus Tesla, of course. And of course, consumer electronics has gone through a massive consolidation. Banking sector is going through that right now. We have too many companies, and the consolidation should be good and helping in an environment where population is declining, and we therefore raise the productivity. Now, the yen, of course, is going to be headwinds and tailwinds. I'm not a currency expert, but what I can tell you is the Japanese corporates are very good at adjusting. It's just that when it adjusts too fast, things are difficult. So whether we end up at 130 or 140 or 120 for that matter, I think Japan will adjust in that new environment. It just is the speed at which this changes is what's confusing for Japanese companies and what's arguably been driving the markets for the last 2 years.
Thank you, Gotoh. Really good to have you with us, CEO and CIO at TriVista Capital there. And of course, you can catch Japan Ahead every Monday at 8:40 a.m. if you're watching in Tokyo, and subscribers can watch live on the terminal using the TV Go function. This is Bloomberg. Here's the latest from the corporate front. Indian discount airline Indigo has ordered an additional 30 Airbus A350 planes to support its international expansion. It's also signed a code-sharing pact with Delta, Air France, and Virgin Atlantic to boost connectivity between India, North America, and Europe. Indigo hopes the tie-up, as well as the expanded jet order, will help attract passengers for its new India long-haul services. Meanwhile, Delta says it's expecting travel demand to recover in the second half of the year. That's after price-sensitive passengers in the U.S. showed restraint in recent months amid a worsening economic climate. CEO Ed Bastian spoke to us exclusively at IATA's annual general meeting in New Delhi.
I think in the U.S. structure, lower ticket prices is part of the reason we're seeing lower prices as costs have come down. it's helping to insulate the fall off that we've seen from expectations on demand. Year over year, though, demand hasn't fallen. Demand's pretty flat too, and I expect in the second half of the year, it hopefully will tick up a bit.
We'll be live at the World Air Transport Summit in New Delhi today, getting the aviation sector outlook with the bosses of Hong Kong Express, Air India, Air New Zealand and Emirates. Let's take a look at the setup across Asia as we get trading started in just about 6 minutes' time. Across major markets, all looking a little bit dour at the moment. Asia is increasing. Geopolitical as well as tariff woes continue to play on these minds. We've seen US stock futures also slipping as well this morning, 0.3% lower. The setup in Sydney is looking pretty muted, 0.25% softer, as is that open in Japan as well. We'll be watching for some of those energy-related stocks. So as we see oil prices continuing to rise, Shery is sort of an interesting to and fro when it comes to whether geopolitics is really driving these markets at the moment or some of the supply side issues.
Yeah, rebound after 2 sessions of losses, right, for oil prices. At the moment in the Asian session, though, gains towards that $62 a barrel. We heard from OPEC Plus that they agreed to increase oil output by 411,000 barrels a day in July. And take a look at how gold futures are gaining ground early in the Asia session. A little bit perhaps of that risk-off sentiment. We saw that pressure on U.S. equity futures as well, with the Bloomberg Dollar Index really holding steady after notching its longest monthly losing streak in about 5 years or so. But take a look at how U.S. futures are looking, as I said, a little bit of weakness. This after the S&P 500 finished unchanged in the Friday session, but this after really getting a hit of about 1% after President Trump accused China violating an agreement with the U.S. to ease tariffs. Still, the S&P 500 about 4% away from its February record high. The market opens in Sydney, Seoul and Tokyo are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens. A busy week ahead. Of course, we have plenty of eco data, including China's PMI numbers, not to mention a presidential election here in South Korea. Heidi, we are expecting that vote on Tuesday. We'll be covering the latest when it comes to really the candidates' response to, of course, the tariff threats coming from Washington as well.
Yeah, not to mention the domestic pressures, right, and really the need, I think, for the broader population to want to move on beyond the political chaos domestically that we've seen over the past few months. But Shery, you're right, the front and centre continues to be this volatility when it comes to global trade, the doubling down when it comes to steel and aluminium, and, some of the negativity when it comes to that trade pause with China as well.
Yeah, at least when it comes to Japan, top trade negotiators seem to be a little bit more optimistic. Kazawa now saying that they could see a deal with Washington as early as this month. Take a look at the open with the Nikkei now losing about 0.8% right off the bat, and the topics also under pressure. We had seen a session of losses on Friday as well, a lot to do with concerns over tariffs. You mentioned steel and aluminum, and President Trump now really threatening 50% rate on that front. We also saw faster than expected inflation in Tokyo. So we'll be watching JGBs as well. Take a look at how the Kospi is coming online. We saw it gain about 2% ahead of the snap elections, of course, on Tuesday. The expectation right now is that South Korea could see the end of 6 months of political turmoil. So we have seen a rally for Korean equities in the past few weeks. The Kospi right now unchanged. The Kosdaq also not doing that much. But the Korean won holding at that 1382. We had seen a little bit of some pressure on the Korean won last week against the U.S. dollar. But remember, Heidi, we had seen the dollar also seeing losses, the longest monthly losing streak since 2020. So that will have implications on this side of the trade.
we're sort of watching how that trades against the Aussie dollar as well, given how much of this has been a proxy for that China risk. But take a look at just the first sort of few moments or so of that staggered open. It's never sort of not tricky to get a read on this early part, but we are expecting a pretty muted session when it comes to trading here in Sydney. The Aussie dollar actually seeing a little bit of a pop there, about 0.25%. Interesting. Of course, we do have China PMI numbers this week. We had some of the weakness as expected when it comes to China home sales continue to play through with data over the weekend, but also watching Australian bonds as well as treasuries and some of the regional bonds as well, as we had futures really in terms of stock futures slipping, but a little bit more of a move higher when it comes to treasury futures at the moment as well, just compounding that recent rally that we've seen. And of course, that's created sort of further downside when it comes to the equities sentiment there. Also watching oil, as we've been talking a little bit earlier, that advance, even as we see sort of the vying between the forces of geopolitical threat when it comes to Ukraine and Iran, but also the expected addition to the quota by OPEC+. Let's get some analysis now. Mark Matthews is the head of Asia research at Julius Baer. And Mark, always great to have you with us. And the degree of volatility when it comes to tariffs and trade continues to remain pretty high, even with, you know, the recent pauses and détente that we've seen with China. Would you be betting that these continue, or is it still sort of anything could happen when it comes to the Trump presidency and trade?
Anything could happen. The policy uncertainty is a factor, but I would point out the stock market's implied volatility is actually not particularly elevated. It's only around 18 or 19% in line with the long-term average. I think, broadly speaking, the tariffs, they will be there. They're not going away because with all this tax cutting that will be happening in the United States, they need the revenues from the tariffs. And I guess when the dust settles, it should be somewhere around, let's say, 10% broadly, the average tariff on imported goods into the United States. And just to put that in perspective, the average value-added tax in the European Union is 22%. So I'm not saying it will be pleasant for consumers, but I think they will be able to take it, and probably distributors and the countries that make those goods will absorb a couple of percentage points here and there. Still, the net effect of all of this, I think the policy uncertainty and the wider deficit means that the Treasury yield will continue to remain quite elevated, and at the same time, people will want to find places to invest outside of the U.S., and so the net impact of that is probably a weaker dollar. So we're in a kind of strange situation now where Treasury yields will remain elevated, and the dollar will continue to go down.
When it comes to looking for spots outside of the US, I think something like 8 out of the top 10 best performing markets in the world are European ones. There's obviously the sort of less consensus trade when it comes to Hong Kong and China. Where do you think there's the better opportunities there, ex-US, that perhaps, you know, run counter to all of the domestic derived risk that we see from Washington?
Heidi, I see two. The number one in Europe would be mid-caps in Germany. So those are companies valued between $2 to $10 billion. And as you know, they have announced a €1 trillion stimulus package to be spread over 10 years. And we think that will probably mean GDP growth upwards of 2.5% to 3% between 2027 to 2030. And that will already start to pop up in the earnings much faster. We're looking for mid-cap earnings growth in the very high teens, almost 20%, both this year and next year. And if you look back in history, there's a very close correlation between the relative performance of German mid-caps versus the stock 600 and German manufacturing PMI. So in other words, if German manufacturing PMI goes up, which we think it will, the mid-caps will outperform. And then I'll just say very briefly, China and Hong Kong property is probably the most toxic and disliked asset in the world. That is more than reflected in the price, 60 to 70% discounts to NAV. And what I'm seeing is for 5 months in a row now, Tier 1 city new property prices have been rising. The credit market is functioning again. Developers are starting to pay a premium for raw land. And there's sort of an enthusiasm now in China. There's a better feeling because of the big strides they've made in technology, artificial intelligence, electric vehicles, semiconductors. So the economy's still sluggish, but there's a big improvement in the mood. So I think there's tons of good value in property in Hong Kong and China.
Does that mean that you enter the market now, or you just hold off a little bit until we see a little bit more clarity when it comes to the trade tensions with Washington as well?
Well, I don't remember what percent of analysts have buys on those stocks, but I know it's less than 50. So the market still doesn't like them. The market thinks, to your point, it's too early because there's a trade war. Property developers have weak balance sheets, so there could be fire sales. New launches are being done at discounts to the older properties. I just think that when something is already trading at a 60 to 70% discount, it's fine to buy it today. Even if prices go down another 10, 20%, that discount is still going to be 50 to 60%. It's simply too wide.
And there seems to be more optimism when it comes to the South Korean equity markets, given, of course, the presidential election coming up, perhaps the end of that 6 months of political turmoil. Here, is there anything that you like in this market or that you're watching, especially when we hear from more candidates that they really do want to improve corporate governance? Could this market become the next Japan?
It certainly has the potential, but I feel that on its own, the corporate governance story is not going to be enough to counteract what is a much more ominous threat to South Korea, which is, as I just mentioned, China all of a sudden is extremely competitive in the highest ends of technology. And we're seeing that expansion of market share globally. When I go now to Jakarta or Kuala Lumpur or Bangkok and I stroll around the malls, I notice the teenagers are just as proud, just as happy to have Oppos or Xiaomi phones as they are Samsungs. And you could extrapolate the same for cars. So I'm afraid the big threat to Korea is its manufacturing sector is going to be impeded on by China.
And Mark, before we let you go, we are getting some latest lines from the Fed Governor Christopher Waller talking about how tariffs will impact the U.S., that they expect a tariff-driven inflation will not necessarily persist. How do you expect these trade tensions to change the calculus for the Federal Reserve?
Well, I agree with him that the tension, the impact of the tariff is a temporary one. So let's say the price goes from $1 to $1.10, and then after that it just stays at $1.10. The initial lift is a 10% rise, but then after that the inflation rate's zero because the Fed's looking at the rate of change. So for us as consumers, we would say, oh, there's still inflation because it still costs $1.10, but actually the rate of change thereafter is flat. So we could get a bump in inflation, but it will be temporary. And if you look at the core PCE reading for April at 2.5%, very reasonable, well within the Fed's target. The Cleveland Fed is expecting about 2.6% for this month. And so I think we can get rate cuts, and we're expecting the first one to come in September.
Mark Matthews, always good to have you with us, head of Asia Research at Julius Baer. And just as you were watching live right now, the Fed Governor Christopher Waller is delivering a keynote and participating in a dialogue with the Bank of Korea Governor Lee Chang-yong. We mentioned one of the comments that he made about the tariff-driven inflation not necessarily persisting in the United States. He also expects tariffs to raise the unemployment rate, although the job cuts will remain modest in a lower tariff scenario. Also, he expects the tariff costs will be shared by consumers and firms, and he sees a path to, quote, good news rate cuts later this year. Heidi?
On U.S. goods imports.
Of course, there's so much conversation around the impact of whether we're going to see those longer run inflation expectations change as a result of tariffs, right? And the tariff picture, Shery, we know is changing day to day, sometimes hour to hour. And in fact, the latest development, of course, is President Trump to hike those tariffs on steel and aluminium. He thinks that that will sort of aid the Nippon-US Steel deal and to sort of champion that expected deal between the two groups and protect American workers, according to President Trump, sort of in terms of his reasoning for this deal, for this move to hike these tariffs on steel and aluminium to 50% from 25%. You're seeing that reaction positive when it comes to Nippon Steel. BlueScope also benefiting with a lot of US operations for Australia's BlueScope Steel as well. But when it comes to some of the Korean steel makers, POSCO, Hyundai, we're seeing quite a bit of downside there. More ahead on the Asia trade. This is Bloomberg. Ukraine has staged a series of strikes against Russia, across Russia, deploying drones hidden in trucks to hit strategic airfields and damaging over 40 Russian aircraft. Around the same time, Russia also launched drone and missile attacks against Kyiv, killing at least 12 people. For more, let's bring Bloomberg's Michael Heath. A pretty extraordinary the degree of conflict that we're seeing at the moment, even as, of course, ceasefire talks are supposedly on foot.
Yeah, it seems like it's escalating. I mean, in fairness, this, according to President Zelensky, this drone attack was about 18 months in the making. So the timing wasn't, sort of particularly coordinated or anything like that. And it's just the scale of this attack too. I mean, they're out in eastern Siberia. This is sort of almost another continent away that they've managed to do this. And on one hand, it sort of really should embarrass Russia that it's so easily penetrated. And yet, on the other hand, because of the control of information within Russia for the government there, it's probably not going to do a lot. They're playing it down. They're denying as much as the damage levels that Ukraine was talking about. But yeah, and then you've got Russia, of course, hitting Kyiv and Ukraine again, and which they've been doing fairly regularly. And as you say, they're supposed to come in and try and talk about sort of de-escalation or some sort of truce or bring the conflict to a close. But it doesn't look like anything like that on the battlefield at the moment. Though that said, both of them are going to be looking for sort of to have some sort of psychological advantage over the other, and in many respects, that's probably to some extent what this is about.
I mean, is there a point right now at meeting after such an escalation of tensions already? As you said, the bar seems pretty low for these second round of negotiations in Turkey. What can reasonably be achieved?
Yeah, Shery, I mean, look, the two things can sort of almost go simultaneously. I mean, this is a real sort of attritional battle here, as we've seen. And, in the first round, when what came out of the first round of talks was a prisoner swap, and that took place simultaneously with Russia bombarding, Ukraine and killing civilians as well in that attack. So they can sort of work on separate tracks, but it really comes down to what Russia is prepared to stump up, because in that first round of talks, everything that Russia was putting forward was absolutely maximalist demands, and there's no sense of compromise or give and take there. And there is a strong sense that they've got time on their side here. How long will President Trump be interested in the conflict? How much pressure will he put on if he doesn't think that he's going to get much value or any success out of it? And President Zelensky has to sort of keep aligned with the US on this and basically be prepared to front up at every single negotiation and be prepared to try to forge some sort of ceasefire or peace here. But yeah, the prospects don't look great.
Right. Bloomberg's Michael Heath there with the latest when it comes to Ukraine. As right now we're hearing from China as well. They're issuing comments on the United States when it comes to, of course, the ongoing trade negotiations and the risks around tariffs. China now saying that the U.S. continues to provoke new trade frictions, urging the U.S. to safeguard the consensus that were reached between the two sides when they talked back in Geneva. Beijing saying that they're firmly rejecting unreasonable accusations from the U.S. They continue to take measures to safeguard their interests and urging the U.S. to promote stable trade relations with China. This, of course, comes after President Trump accused Beijing of really not adhering to an agreement when it comes to easing trade tensions. That sent the S&P 500 into a tailspin just on Friday with a loss of about 1%. And China now coming out, issuing those comments on the U.S. that Washington continues to provoke those trade frictions and saying that they firmly reject unreasonable accusations from Washington. President Trump, of course, has also been doubling down when it comes to tariffs on steel and aluminum imports to 50%, saying the move will help protect U.S. workers for more. Let's bring in Bloomberg editor John Herskovitz. John, of course, 50% rate of tariffs on steel and aluminum. That's huge. But at the same time, how does that really play into the fact that President Trump is also championing this deal when it comes to U.S. steel with Nippon Steel?
No, exactly. The tariffs are of a very high rate, and we have the Nippon Steel deal with U.S. Steel. On the campaign trail, Trump opposed this deal. He said was against U.S. national interests. It would hurt the U.S. steel industry. And in order to push this deal forward, he's putting forward these tariffs. Now, the deal that Trump has outlined means that U.S. Steel would stay U.S.-owned, U.S.-operated, and it would bring in Nippon Steel investment for modernization of the plants to make the works more efficient, and there would also be more money for the workers. But it's a difficult sell. The Biden administration opposed this deal, the Trump administration opposed this deal, and in order to get it over the line, I think this was the terms that were given and the protection for the overall the U.S. steel industry as a whole. With these huge tariffs. I mean, the 50% tariffs on steel and aluminum, it pretty much shuts out outside metals from coming into the U.S. These are really high rates. So, and it comes on top of a really turbulent week for Trump. Last week, we had the International Trade Court saying that his so-called reciprocal tariffs were not legal. This was, of course, stayed, the tariff levy stayed as part of appeals process. You have the dispute with China, which you spoke about earlier, and also some buzz in the market about whether Trump has the fortitude to stick with the demands that, or the tariff numbers that he introduces. This was some nicknamed the taco trade, which also seems to have gotten under Trump's skin. So a lot of things going on last week, and this was something that Trump, he showed it as a victory lap, the U.S. Steel deal.
The other sort of overlay is really the legal framework, right? We saw that was a big sort of part of the narrative last week, and now there's a separate legal doctrine that could come into play here, one that was actually used against President Biden, and this could be another threat to Trump's tariff plans.
That's right. The doctrine that you're talking about is called the Major Questions Doctrine. It concerns, it's something that the Supreme Court's conservative majority under the Biden administration used as part of a ruling to knock down Biden climate changes and student loan forgiveness. The crux of the argument is that the president cannot make sweeping changes to the economy over what the power given to him by Congress. Now, the original court decision for the International Court with the so-called with the tariff regime that Trump announced is that this was in excess of an emergency act of 1977, I believe. And this may be used for the decision on whether the reciprocal tariffs that Trump announced are under his authority, if he had exceeded his authority for this. Meanwhile, the Trump administration officials went on weekend television. They're saying that Trump is sticking by these so-called reciprocal tariffs, that they're going to come into effect when the 90-day pause is over, really saying that that the court decision will come down in their favor, Trump's acting in his authority, and that the tariffs that were announced will be imposed and that they are going to hit the global economy as soon as the 90-day pause announced in April is over.
Bloomberg's John Herskovich. And as Shery mentioned, we are getting the statement out from the Ministry of Commerce in China responding to the state of negotiations and also some of the commentary that we've heard from President Trump and the US when it comes to that US-China trade relationship. China is saying that the US continues to provoke new trade frictions and urges the US to safeguard consensus reached in those talks in Geneva, firmly rejecting unreasonable accusations and continuing to take measures to safeguard their own interests. We're seeing Beijing now urging the US to promote, quote, stable trade relations with China and healthy economic and trade relationship, ultimately saying that the US's move to undermine consensus at those Geneva talks. So the market reaction will be interesting because, of course, there's already quite a bit of downside now starting to percolate through in terms of the negativity between the two sides, despite, of course, this ongoing trade tariff pause and some of the agreements that have been made to continue talking. We haven't seen that leadership phone call yet, despite it being flagged by the Trump administration. And of course, it was quite a bit of sort of development last week as well that would have displeased Beijing when it comes to international students and visas. More ahead on the Asia trade. This is Bloomberg. Some of the other stories that we're following this hour, several people have been injured in Boulder, Colorado, in an attack in an event being held to support Israeli hostages. Police say the weapons appear to be bottles of flammable liquid and a suspect is in custody. Colorado Governor Jared Polis issued a statement condemning all hate-filled acts. The incident took place on Sunday, and Boulder Police Chief Stephen Redfern says it's too early to determine if the motive was terrorism.
I've been in contact with our local FBI multiple times. We are in contact with them here. We are not calling it a terror attack at this point. Again, it's way too early to speculate motive. I know there's a lot out there on social media, but I ask people just to give us a little bit of patience while we work through a really complex scene.
OPEC Plus has agreed to increase oil output for the third month in a row, despite reservations from key member Russia. Oil-producing nations say they're adding 411,000 barrels a day to the market in July, matching increases scheduled for May and June. The supply hike is seen as a move by Saudi Arabia to punish overproducing members, recoup market share and satisfy President Trump's desire for cheaper oil. We are seeing crude oil gaining in the Asian sessions, suggesting there is a little bit of skepticism in these markets when it comes to the bearish impact from that supply quota increase that was decided over the weekend by OPEC Plus. We are seeing the downside when it comes to major energy producers, particularly here in Australia, Santos and Woodside. Also in Japan, we're seeing INPEX down by just about 0.1%. This is Bloomberg. Take a look at how markets are faring. We're just about 30 minutes into the start of trading across major markets there, but we are seeing some downside pressure, renewed really pressure as this reignition of trade tensions after a few weeks of sort of relative calm. We're seeing the stepping up of rhetoric when it comes to steel and aluminium tariffs by President Trump, the doubling down of those. And now, of course, we're also getting a pretty forceful reaction from the Ministry of Commerce in China as well, saying that what we're hearing from the US really undermines consensus that was reached at those key Geneva talks that, of course, sort of paved the way for this trade pause, or at least a sort of freeze in tensions. But at the moment, things are cooling quite significantly. We also had some of those moves when it comes to international students from China, visas as well being called into question last week by Washington to the displeasure of Beijing. China saying that they firmly reject the unreasonable accusations from the US and that the US is continuing to provoke new trade frictions. So that downside being seen across markets, including here in Australia. We've also got the Aussie dollar emerging as the biggest winner at the moment in trading in that G10 from the dollar weakness story. Shery.
Really, when it comes to those trade tensions, of course, they have weighed on PMIs across the board. Take a look at how Asia PMIs are coming in. The likes of Indonesia, 47.4, are improving slightly from the previous month for the month of May, but still in contraction territory. Same for Taiwan, that has been in contraction territory since March, 48.6, a slight improvement. For South Korea as well, a slight improvement to 47.7, but again, is now in contraction territory below that 50 threshold for a fourth consecutive month. Not surprising, Heidi, because in South Korea, we also had the export numbers from May over the weekend contracting 1.3% year on year. Really not a great backdrop to go into the presidential elections as Koreans head to the polls on Tuesday.
Not a great backdrop at the moment when it comes to China, despite the factory activity improving in May. The trade war truce with the US, of course, playing in there. Output, though, remaining in contraction, lingering uncertainties, weakness in the housing market. Let's bring our China correspondent in Min-lo in Hong Kong. And now it seems like we're sort of watching that fragile good faith between Washington and Beijing kind of break down in real time. But take us through the data and what it tells us about the state of the economy at the moment.
Yeah, we actually like what we're seeing across the region as well. We're seeing a bit of relief coming through in the PMI numbers. The official manufacturing PMI coming in at 49.5, which was in line with expectations. But as you said, still below that 50 threshold, still in contraction, but an improvement from the previous month when it was 49. Bear in mind, there was the May Day holiday. So if we strip away that seasonal distortion, the reality might be even better. And if you look at the sub-indexes, we are seeing a really big bounce, especially when it comes to the new export orders. Production sub-index also expanding to 50.7. So we're likely to see that tailwind coming in the next couple of months as well. We also have the PBOC cutting rates, giving a lift to the economy. And you look at the non-manufacturing PMI, though, that slightly undershot expectations at 50.3. We had the May Day holiday, so that helped to lift the services PMI slightly, especially when it comes to the tourism-related sectors like catering and accommodation. Construction slightly expanding, but at a slower pace, again because of the holiday, but overall pretty robust because of government spending. And this will likely give the government a little bit of breathing room, causing them to maybe use this period to observe before announcing further stimulus measures.
Yeah, and Min, we just heard Heidi allude to that fragile truce between the U.S. and China, which of course will have such big implications for the Chinese economy going forward. Beijing seems to be firing back at the U.S. over what they call unreasonable accusations.
Yes, Beijing is turning the table back on the U.S. after Trump had accused China of violating a big part of the agreement made in Geneva. And China is saying it is the U.S. that is violating that agreement, especially when it comes to expanding chip controls, limiting the sales of chip software to China, and also revoking visas for Chinese students, saying these are unilateral discriminatory acts towards China, and urging the U.S. to safeguard that consensus in the Geneva talks, and accusing the U.S. of essentially provoking new trade frictions here. So both sides trading accusations with each other. And then you have the White House economic advisor, Kevin Hegseth, saying he expects both presidents to speak sometime this week. But again, how much weight can we put behind that? Because Trump previously, after the Geneva talks, had also said he was expecting to speak with President Xi at that time at the end of the week, but that call didn't really happen. We haven't heard any confirmation from the Chinese side that an impending call would be happening anytime soon. So tensions are heating up. That trade truce appears to be quite fragile. Of course, that deadline is coming up in early August. We'll have to see between now and then whether both presidents will pick up the phone to try to clear up some of these tensions.
Bloomberg China correspondent Min-lo there with the latest on China. Now, the Philippine Defense Secretary says China is the biggest security threat for his country as well. Gilberto Teodoro has accused Beijing's military of grabbing territory in the South China Sea and expanding its presence to the Arctic and off Australia. He spoke to us at the Shangri-La Dialogue in Singapore.
Strong fences make for good neighbors. We're building our fences. We're building our defense resilience so that for deterrence, because we do not want conflict, but we see that unless our diplomacy is backed by deterrent capabilities, then our words will not be as impactful and purposeful.
When you take a look at satellite images, they're suddenly showing an expansion of Chinese presence. How far is the Philippines prepared to go? How will you respond if, a reef that's close to the Philippines is seized by the Chinese?
Well, we have a variety of options in our toolkit. naturally, we would prefer, we would choose a less acrimonious option, but nonetheless, we have to uphold our territorial integrity and sovereignty. And we have devised options in our toolkit to deal with contingencies, and we plan for these and train for them accordingly.
Let's talk about U.S. presence here. We had Pete Hegseth saying that China is the biggest security threat for the world right now. And he talked about how the Chinese are preparing to attack in Asia. How are you responding to that? Do you see the real possibility of that?
It is expanding. It is grabbing territory in the South China Sea. It is engaging in activities near the Arctic and off the shores of Australia. So what conclusion can one draw if you have the biggest military buildup now in the world, coupled with the fact that they have pronounced actually that it is the time for Chinese leadership.
You also used the term deficit of trust.
Oh, yes.
Referring to China. Isn't there also a deficit of trust when you take a look at the U.S., considering this is the U.S. that has threatened to take over the Panama Canal, Greenland, even Canada?
Well, that's relative, you know. For us, our biggest threat is China, and on that we converge, not only with the United States, but with other countries. Now, I said deficit of trust because China claims that it wants to negotiate with us and wants to, not negotiate, I'm sorry, wants to dialogue with us and consult. They never use the term negotiate. It's always dialogue and consult. So even the expression of how they want to engage is nebulous. So that being the case, a condition precedent for a dialogue or consultation, to use their terms, to be effective is that there must be trust. If not, you know, there'd be like poker players fooling each other. So what is the use, especially when human lives are concerned?
Philippine Defense Secretary Gilberto Teodoro there speaking with Bloomberg's Haslinda Amin. We do have some statements out from both the Bank of Korea Governor Lee Jong-yong speaking in Seoul with the Fed's Chris Waller, but also from the South Korean government as well, really addressing the impact of these broader tariffs, sectorial tariffs, but also the steel tariffs as well, and aluminium tariffs that President Trump has now just doubled down on. The governor saying that trade talks between the US and China are important for Asian economies, that sectoral tariffs are just as important for Korea. Many businesses see 10% tariffs as being manageable. In terms of what we're hearing from the South Korean government in a statement after meeting with local steelmakers, saying that they're working to minimize the impact from the US steel tariff hike. And we've done, in terms of Bloomberg intelligence analysis, looking at really some pretty severe impact on most South Korean steelmakers. The US previously took more than 10% of the country's steel exports before those initial Trump tariffs. Domestic consumption on the other side has been weak as well. Korea is the fourth largest steel exporter to the US and saw an almost 20% decline in steel shipments in March after that original 25% tariff was imposed, and now we're sort of doubling down on that. POSCO is the outlier in terms of not being seen as being more impacted there out of those Korean steelmakers. We're still ahead on the Asia trade. South Koreans also head to the polls tomorrow to pick a new president after the nation's worst constitutional crisis in decades, and of course against the backdrop of the worsening trade tariff war. This is Bloomberg. Well, presidential candidates in South Korea will make their final pitches today ahead of elections expected to have a significant impact on the country's equity market. Let's bring in Bloomberg's Asia stocks reporter Yukon Lee for more. So I guess starting off with where you see perhaps the biggest reaction across stock markets after the election, depending on what the result is.
Sure. So we've already seen some investors, actually a lot of investors already being positioned in some of the biggest beneficiaries they expect to see post-election. And those are definitely going to see continued reactions after the result, including some of the energy stocks, securities, and also some of the China-exposed stocks, as well as some of the consumer sectors, such as retailers. Investors expect that there will be growth in trading, and so which is going to benefit some of the local brokerages, which are set to see the biggest annual performance already, because a lot of investors have been piling into the local brokerages on expectation that the post-election trading will be booming in South Korean domestic stock market. And another sector that we are going to definitely see reaction is energy. Nuclear energy, renewable energy, depending on the results of the elections, are going to see some of the results. For two of these front-runner, the candidates are showing major differences in terms of their nuclear energy policy. So we'll definitely see the diverging fate in the nuclear energy sector and the renewable energy sector, depending on who wins the election. So having said that, we might see some profit taking on the first day of trading after election, because there has been already big positioning and buying into a lot of these sectors. So in the near term, some of these sectors may also suffer some profit taking on Wednesday, depending on the results.
Yeah, sort of sell the news situation, right? But Yu-Young, we have seen a lot of optimism over corporate governance reforms in this country, turning the Korea discount into a Korea premium of sorts. What sort of long-term changes are you expecting to see?
Yes, absolutely. So the South Korean Kospi has been outperforming the region already so far this year, and a lot of investors are expecting that this outperformance to continue. And that optimism comes partly from the corporate reform they hope to see after the new president takes office. So whoever takes the office next week, investors are thinking that the corporate reform will continue to happen and may actually pick up speed. And from the presidential frontrunner Lee Jae-myung, the commercial code amendment has been the biggest campaign promises that he has said. And the amendment in the Commercial Act is something that investors see could unlock the value in the South Korean stock market, because it could help improve the minority shareholders. So while his rival Kim Moon-soo is pushing for a lesser comprehensive reform, he is still agreeing on the importance of having to reallocate wealth into the stock market.
Bloomberg Asia stocks reporter Yu-Young Lee there, as we're awaiting, of course, the presidential candidates holding their last campaign rallies today, and Koreans headed to the polls tomorrow. Let's discuss all of this with Duyeon Kim, a Jung Senior Fellow at the Center for New American Security. Duyeon, great to have you in our studio today. Let's talk a little bit about what can we expect when it comes to more stability, perhaps, in this economy after we saw 6 months of political turmoil. Whether it's Lee Jae-myung, whether it's Kim Moon-soo, at the end of the day, there's some sort of resolution there.
Sure, and it's not just the economy. There's going to have to be a huge political stability cleanup job happen in this country. Right now, voters on both sides of the aisle and politicians on both sides of the aisle, they're really fighting for their version of democracy. That's really what this vote is about, because it's not a normal election. It happened on the heels or because of an impeachment and an ouster of yet another South Korean president. And so right now, both sides are framing each other, each candidate, as the cleaner or the better Democrat or the symbol of democracy. But at the same time, if you really unpack this, you've got the progressive frontrunner who actually in the last presidential election lost by only 0.7% to President Yoon. And he has long been criticized for anything but being a symbol of democracy. But he continues to paint the conservatives as supporters of what he calls an insurrection. The conservative, of course, the flip side, the other way around. They're trying to paint the progressive frontrunner as, they even call him monstrous dictator. They call him bulletproof dictator. And so this is really a fight for values right now.
Given, as you say, that this is not your typical election, there will be no transition period. No. What will be really top of the agenda for the next president of South Korea?
The top of the agenda really will have to be the economy. And right now, frankly, both candidates, yes, they're talking about their economic policies, but it's really not. All the focus is on each candidate's character. and each candidate's personality and their styles. It's really not about their policy platform, the party platform, or the future policies. But again, the reality will hit South Korea as other countries are facing, of course, Trump's tariffs. And so the number one priority or the job for the next president will have to be the economy. Welfare. South Koreans are very tired and frustrated with economic challenges. They want more financial prosperity, individual financial prosperity, but also the next president will have to deal with the biggest security threat, which is North Korea and a rising China.
Who has more or more well-honed chops when it comes to those sort of broader security, foreign policy, trade-related issues? Is there sort of seen to be an advantage for one side or one candidate or another, given that there are also, a lot of different factions depending on the attitude towards the US or Japan or China that you're talking about?
Sure. And, both candidates actually have a good pool of advisors that are advising them. Now, the variable or the caveat here is if either of them are president, will they actually listen to their foreign policy advisors? The progressive frontrunner Lee Jae-myung, he is long known to have said things in public that suggest he is or he harbors resentment against the United States. The far left, there are factions in the left that are anti-U.S. He's called American troops here on the Korean Peninsula imperial forces, and he has said things that suggest he is pro-China. But leading up to this election, he has changed his rhetoric to sound more centrist to get the moderate votes. And he really does have a strong team of foreign policy advisors, but again, it depends on if he is elected, will he listen to them? On the right, again, there's a strong pool of foreign policy advisors on the right as well. And so when it comes to dealing with the United States, the alliance with the United States, I think Washington typically prefers, or it feels more comfortable working with a conservative administration here in South Korea. It's just easier for them to work together. But a conservative administration will also come with some challenges and some frustrations on the American side. For example, there are growing debates and calls here in South Korea for South Korea to go nuclear themselves. And so that will be some challenges or some issues that the alliance will have to, the allies will have to work through.
To just quickly, on talking about being centrist, it's really interesting that Lee Jae-myung was in the past compared to Bernie Sanders because of those wealth distribution policies that he wanted. How much of a change have we seen in those economic policies from Lee Jae-myung when it comes to trying to appeal to the broader public that, of course, investors around the world should be watching?
Right. So with Lee Jae-myung, the biggest criticism he gets is that he has changed his rhetoric, and there are a lot of critics and skeptics who don't quite believe his words. And so this is where we're in unfamiliar territory in terms of we have known what he has believed in the past, but he has changed his words in the past few weeks and couple months. And so the big question is, and it's really hard to predict whether he's going to live up to those campaign pledges or whether he's going to go back to a so-called far leftist type of policy to satisfy his base, because he will not be able to ignore his base, his progressive base, when he is elected president.
Duyeon Kim, really good to have you here in the Seoul studio, Jung Senior Fellow at the Center for a New American Security. We have more ahead. This is Bloomberg.
The US has asked Australia to dramatically increase its military spending to 3.5% of GDP. US Defence Secretary Pete Hegseth made the request during a meeting at the Shangri-La Dialogue in Singapore with his Australian counterpart Richard Marles. In response, Prime Minister Anthony Albanese says Australia will determine its own levels of military expenditure. Canberra is currently on track to boost its defence budget to 2.4% of GDP over the next decade. Richard Marles also told us that China's rapid military build-up means a US presence in Asia remains crucial.
I mean, China is engaging in the biggest conventional military build-up that the world has seen since the end of the Second World War. And that that's happening without a strategic transparency or a strategic reassurance for the region, for its neighbours, indeed, I think, for the world. And it really is, I think, the issue which so many of us are grappling with. So in that context, America being focused on the region is really important. We need to be working with America to provide balance in this region, and also to do everything we can to see a region which is underpinned by values that we share with the United States of democracy and the rule of law.
We saw China's defense systems on display during the conflict between India and Pakistan. What's your takeaway from that? Have you been surprised?
Well, I mean, we have been very aware for a long time that China's quantity of defence material is vast, but also its technological capabilities are very significant as well. I mean, they are building up a formidable defence force.
Australian Defence Minister Richard Marles speaking with Bloomberg's Jacinda Amin. It's time now to check some of the stocks to watch when markets open in Hong Kong. Steel and aluminum shares in focus after President Trump said he would double tariffs to support U.S. workers to 50%. Casino operators also on the radar after Macau reported gaming revenue that topped analyst expectations on the back of a tourism boom from China's Golden Week holiday. Also keep an eye on New World development after the Hong Kong developer decided to defer interest payments on 4 perpetual notes. The China Show is next. This is Bloomberg.